Welcome. In this video, we'll walk you through the highlights of the Internal Revenue Bulletin 2010-40. Whether you're a tax professional, business owner, or just someone interested in staying informed about tax updates, this guide will help you understand the latest rulings, procedures, and announcements from the IRS. We'll break down complex topics into clear, actionable insights so you can stay ahead of the curve. Let's get started by exploring what the Internal Revenue Bulletin is and why it matters for taxpayers across the United States. The Internal Revenue Bulletin, or IRB, is the official weekly publication of the IRS. It announces new rulings, procedures, treasury decisions, and other items of general interest. The IRB is essential for tax professionals and the public because it provides authoritative guidance on how tax laws are applied and interpreted. Each issue is carefully organized, making it easier to find the information you need, whether you're looking for updates on income tax, employee plans, or administrative procedures. Let's see how the IRB is structured and what you can expect in each section. The IRB is divided into four main parts. Part I covers rulings and decisions under the Internal Revenue Code of 1986. Part II focuses on treaties and tax legislation, including conventions and committee reports. Part III deals with administrative, procedural, and miscellaneous topics such as notices and revenue procedures. Finally, Part IV includes items of general interest, like proposed rulemakings and announcement. This structure helps readers quickly locate the topics most relevant to them. Now let's dive into the highlights of this particular issue. Issue 2010-40 of the Internal Revenue Bulletin features several important updates. These include new federal rates for October 2010, proposed regulations on uncertain tax positions, guidance on the production tax credit for refined coal, and updates on interest rates for employee plans. Each highlight is designed to keep taxpayers and professionals informed about changes that could impact their filings or planning. Let's start by looking at the new federal rates announced in this issue. RevRul 2024 sets out the applicable federal rates AFR for October 2010. These rates are used for various tax purposes, including determining the present value of annuities, interest for life or term of years, and low-income housing credits. The bulletin provides tables for short-term, mid-term, and long-term rates, as well as adjusted rates for tax-exempt bonds and other calculations. Staying updated on these rates is crucial for accurate tax planning and compliance. Applicable federal rates, or AFRs, are published monthly by the IRS and are used to determine the minimum interest rates for loans, present value calculations, and more. For October 2010, the annual short-term AFR is 0.41%, the mid-term AFR is 1.73%, and the long-term AFR is 3.32%. These rates affect a wide range of financial and tax decisions, from intrafamily loans to business transactions. Let's see how these rates are applied in practice. In addition to the standard AFRs, the IRS also publishes adjusted federal rates for specific tax-exempt purposes. For October 2010, the adjusted long-term rate is 3.45%. These adjusted rates are used for calculations involving tax-exempt bonds and certain other transactions. Understanding the difference between standard and adjusted rates can help ensure compliance and optimize tax outcomes, especially for organizations dealing with tax-exempt financing. Bulletin also provides the appropriate percentages for the low-income housing credit under Section 42B(1). For October 2010, the 70% present value credit is 7.58%, and the 30% present value credit is 3.25%. These percentages are vital for developers and investors in affordable housing projects, as they directly impact the amount of credit that can be claimed. Let's move on to other key updates in this issue. October 2010, the applicable federal rate for determining the present value of an annuity, an interest for life or a term of years, or remainder or reversionary interest is 2%. This rate is used in estate and gift tax planning, as well as in structuring charitable remainder trusts and similar arrangements. Knowing the correct rate ensures that calculations are accurate and compliant with IRS requirements. Notice 2010-54 provides interim guidance on the production tax credit for refined coal under Section 45 of the Internal Revenue Code. This credit is available for qualified refined coal produced and sold by the taxpayer during a 10-year period. The notice updates definitions, processing rules, and testing protocols for emissions reductions. If you're involved in energy production or environmental compliance, these updates are especially relevant. Refined coal is defined as fuel produced from coal or high-carbon fly ash, sold to an unrelated person, and certified to result in a qualified emission reduction when used to produce steam. The notice clarifies what qualifies as refined coal, including steel industry fuel and certain waste coal products. This definition is crucial for determining eligibility for the production tax credit. To qualify for the refined coal credit, the fuel must achieve a reduction of at least 20% in nitrogen oxide emissions and at least 40% in either sulfur dioxide or mercury emissions, compared to the original feedstock coal. For facilities placed in service before 2009, the reduction requirement is 20% for both. These standards encourage cleaner energy production and support environmental goals. Refined coal credit is calculated based on the amount of qualified refined coal produced and sold during the 10-year period after the facility is placed in service. The credit amount is adjusted for inflation and may be reduced if the project receives government grants, tax-exempt bonds, or other subsidies. Accurate record-keeping is essential to substantiate claims for the credit. Taxpayer does not need to own the refined coal production facility to claim the credit. If you lease or operate a facility owned by someone else, you can still qualify for the credit as long as you produce and sell the refined coal. This flexibility allows more businesses to benefit from the incentive and encourages investment in cleaner energy technologies. The IRS allows several methods to verify emission reductions, including Continuous Emission Monitoring System, CEMS, field testing, pilot-scale combustion furnace testing, and laboratory analysis. Each method has specific requirements for accuracy and verification by a qualified individual. Proper documentation is critical to demonstrate compliance and claim the credit. Taxpayers claiming the refined coal credit must keep detailed records to prove eligibility. This includes documentation of production, sales, emission reductions, and any government grants or subsidies received. The IRS may request these records during an audit, so maintaining organized and accurate files is essential for compliance. Notice 2010-61 provides updates on the weighted average interest rates, yield curves, and segment rates for corporate bonds, which are used in pension plan funding calculations. These rates affect the minimum funding requirements for single and multi-employer plans, as well as the calculation of present values for participant benefits. Staying current with these rates helps ensure proper plan administration. Plan years beginning in September 2010, the corporate bond weighted average interest rate is 6.24%. The permissible range for funding calculations is 5.62% to 6.24%. These rates are based on the average yields of designated corporate bond indices and are crucial for actuaries and plan sponsors in determining funding obligations. Bulletin provides monthly yield curves and 24-month average segment rates for pension funding. For September 2010, the first segment rate is 3.78%, the second is 6.31%, and the third is 6.57%. These rates are used to calculate the present value of future pension liabilities and ensure that plans are adequately funded. For August 2010, the interest rate on 30-year Treasury securities is 3.8%. This rate is used for determining the minimum present value of certain pension benefits and for calculating funding limitations. Accurate application of these rates is essential for compliance with pension regulations. Bulletin lists minimum present value segment rates for plan years beginning in 2009, 2010, and 2011. For 2010, the first segment is 2.61%, the second is 4.41%, and the third is 5.05%. These rates are blended with Treasury rates for certain years and are critical for calculating lump sum distributions and other plan benefits. Notice 2010-62 provides interim guidance on the codification of the economic substance doctrine and related penalty provisions. The doctrine requires that a transaction have both a meaningful economic effect apart from tax benefits and a substantial non-tax purpose. The IRS will apply a two-pronged conjunctive test to determine if a transaction has economic substance. Notice also addresses penalties for underpayments attributable to transactions lacking economic substance. The accuracy-related penalty is increased from 20% to 40% if the facts are not adequately disclosed. The reasonable cause exception does not apply to these penalties, making full disclosure and compliance more important than ever. Rev Proc 2010-31 introduces safe harbors for determining the finality of foreign adoptions for the adoption credit and employer-provided adoption assistance exclusion. The procedure clarifies when a foreign adoption is considered final, especially for adoptions governed by the Hague Convention. This guidance helps taxpayers claim credits and exclusions with confidence. Convention adoption is considered final in the year the sending country enters a final decree or when the Secretary of State issues a Hague adoption certificate. For adoptions finalized in the U.S., the finality is based on the state court's decree. This clear guidance simplifies the process for families adopting internationally. Reg. 11904-610 proposes regulations requiring certain corporations to file a schedule disclosing uncertain tax positions related to their tax returns. This aims to help the IRS identify returns with significant risk of noncompliance and select issues for examination more efficiently. The proposal is open for public comment and a hearing is scheduled. Schedule UTP Uncertain Tax Position Statement will be required for corporations with assets of $10 million or more that have uncertain tax positions and issue audited financial statements. The schedule must be attached to the tax return and will help the IRS focus its compliance efforts. Smaller entities are generally exempt from this requirement. Announcement 2010-60 withdraws proposed regulations from 2003 related to the treatment of controlled services transactions and the allocation of income from intangibles. These regulations have been superseded by more recent guidance, ensuring that the tax code remains up to date with current practices. Several announcements in this issue notify donors and the public about the tax-exempt status of various organizations following court decisions. These include changes in recognition under Section 501(c)(3) and eligibility to receive deductible charitable contributions. Staying informed about these changes is important for donors and nonprofit organizations alike. The bulletin includes a helpful glossary of terms and abbreviations commonly used in IRS rulings and procedures. Understanding these definitions can make it easier to interpret official guidance and apply it correctly in your tax planning or compliance work. A numerical finding list is provided to help readers locate specific revenue rulings, procedures, and announcements published in previous bulletins. This tool is especially useful for tax professionals who need to reference historical guidance or track changes over time. The bulletin details how current actions such as new notices or revenue procedures affect previously published items. This includes modifications, revocations, and supersessions. Understanding these effects is crucial for ensuring that you're relying on the most current and authoritative guidance. The Internal Revenue Bulletin is available online at the IRS website. You can view current and past issues, search for specific topics, and download bulletins for reference. This makes it easy to stay informed and access official guidance whenever you need it. In addition to weekly issues, the IRS compiles cumulative bulletins semi-annually. These are available for purchase as single copies or on CD-ROM, providing a permanent, indexed reference for tax professionals and researchers. Subscribing ensures you have access to the complete record of IRS guidance. You can order the Internal Revenue Bulletin and cumulative bulletins by mail or online. Subscriptions are available on a yearly basis, and current subscribers are notified when it's time to renew. Allow 2 to 6 weeks for delivery and remember to keep your subscription up to date for uninterrupted access. The IRS welcomes comments and suggestions about the format and production of the Internal Revenue Bulletin. Feedback can be submitted via email or mail and helps the IRS improve the bulletin for all users. Your input is valuable in making tax guidance more accessible and user-friendly. The IRS's mission is to provide America's taxpayers with top-quality service by helping them understand and meet their tax responsibilities and by enforcing the law with integrity and fairness. This mission underpins all the guidance and updates published in the Internal Revenue Bulletin. Staying up to date with the latest IRS bulletins ensures that you remain compliant with current tax laws and regulations. Whether you're a taxpayer, business owner, or tax professional, regularly reviewing the IRB can help you avoid costly mistakes and take advantage of new opportunities. To recap, this issue of the Internal Revenue Bulletin covers new federal rates, refined coal credits, pension plan updates, economic substance doctrine guidance, and more. Each section provides valuable information for different audiences, from energy producers to nonprofit organizations. Make sure to review the sections most relevant to your needs. For more detailed information, visit the IRS website or consult the full text of the Internal Revenue Bulletin. You can also reach out to the IRS or a qualified tax professional for personalized guidance. Staying informed is the best way to ensure compliance and make the most of available tax benefits. The IRS offers a variety of resources to help taxpayers, including online tools, publications, and customer support. Whether you need help filing, paying, or understanding your rights, the IRS is committed to assisting you. Don't hesitate to use these resources to get the support you need. When accessing IRS resources online, always ensure you're on an official, secure website. Look for .gov in the address and a lock symbol indicating HTTPS. Protect your sensitive information by sharing it only on trusted, secure platforms. The IRS provides information in multiple languages including Spanish, Chinese, Korean, Russian, Vietnamese, and Haitian Creole. This ensures that all taxpayers have access to the guidance and support they need, regardless of language barriers. Stay connected with the IRS through social media platforms like Facebook, Twitter, LinkedIn, and YouTube. These channels provide timely updates, tips, and reminders to help you stay on top of your tax responsibilities and take advantage of new developments. Thanks for joining us on this walkthrough of the Internal Revenue Bulletin, 2010-40. Remember, staying informed and proactive is key to successful tax planning and compliance. Be sure to check the IRS website regularly for the latest bulletins and updates. If you have questions or need assistance, reach out to the IRS or a trusted tax professional. See you next time.